Welcome to the TransparentFX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the chart.
In this video, I will be speaking about USDCHF. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we will be looking at the data precisely for the CHF. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which is currently testing a quite strong level of monthly demand and support. From here, all this previous rejection to the upside was created. The market is currently once again testing exactly the same zone, from which there is definitely the possibility of seeing a potential rejection to the upside. So here on the monthly, everything seems very bullish, and we could expect a potential rejection to the upside away from this zone. Dropping down on the weekly time frame, what do we have? Well, from a weekly perspective, first of all, we have to keep in mind that if we have a movement in the market, which in this case, for example, let's take this impulse to the downside, and we want informations on this impulse, we have to take our Fibonacci on the previous leg, in case we want to see the extensions. So if we want to see the extensions, we have to take our Fibonacci from the high to the low of this impulse. And we can see, in fact, how the market has stopped exactly at the minus 0.618 of the Fibonacci taken on this previous leg, giving us an extension here, which simply means that we have very strong support at this zone. Now, most of the times, Fibonacci levels will be aligning with structured zones, creating confluences of support or resistance. Now, in this case, since this is a support area, it creates a confluence of support with the monthly support that we have previously identified, because at this zone, as we have previously seen, we have both the support on the monthly and this Fibonacci level, which are both lining up here. And in fact, the market stopped at this level and is currently starting a rejection to the upside. Now, it is also important to keep in mind that no market just moves in one direction. Every market will create a series of impulses and corrections. Now, in this case, since we just got one impulse, if we want to essentially have a healthy market, we need to see a correction, increasing the probabilities that the market will create a deeper rejection away from this zone. And if we want to identify how deep that correction must be, we have to take our Fibonacci on the impulse, so from this high to this low, which gives us a first upside target at this 0.32 Fibonacci retracement, which is the minimum retracement the market is supposed to create. That 0.32 is the first retracement level. After that, there is the 50%, and then the 0.618. So here on the weekly and monthly situation is very clear. We could expect more bullish price action away from this zone. Let's drop down on the daily time frame. Now, here on the daily, I did speak about USDCHF a few days ago. I spoke about it when the market was here. I explained all the reasons for which from here we could expect this rejection to the upside, which is in fact exactly what the market just gave us. And by the way, I will link in description that previous analysis so you can go and check it out for more free education. Now, as the market is creating this move to the upside and breaking above structure, where we could be looking for the next potential move. Now, before we continue here with our analysis, let's first go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials are doing in the market, so the big players and hedge funds. Now, if we look at the CHF, and keep in mind that all currencies on the spot are traded against the USD. So if we're checking the data for the CHF, we are already checking CHF USD, so USD CHF. what we can see is that with the last reports, net positions have been decreased. We're now sitting at minus 4.7k net positions, and we can see how we had the high at minus 2k here. And since usually COT data moves in a cyclical way, we went from a low of minus 17k, the high is now minus 2k. Now we're once again starting to get decreased down to minus 4k, and we could expect this to continue with net positions continuing to getting decreased. Now, this makes the CHF weaker, so it will be very interesting to see also what will happen, what we will see with the new report, which is coming out tomorrow. If we will see shorts added on the CHF, that makes USDCHF stronger and increases the probabilities that since the market at the moment is breaking above the structure, if the market will finish breaking above the structure and then go for a retest of this previous resistance turn support, this would be a very interesting area inside of which we could be looking for a potential rejection to the upside, because we would have good probabilities of seeing a potential rejection to the upside away from this zone. Now, how we could be approaching this move? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the market to potentially complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the TransparentFXTrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything you need as a trader all in one interface. And if you scroll lower here, you will see that there is the possibility now to have access to the mentorship program with a huge promotion in which you have both a huge upfront discount on the lifetime access price of the mentorship program from $497 all the way down to only $97 one-time payment for lifetime access. And as an option, since I have partnered with the forex broker Blueberry Markets, if you open an account with them after you join the mentorship program and you essentially move your trading there, you can get a full refund credited back into your trading account. And if you scroll lower, you will see that there is still time to join before the offer expires and the timer goes to 0 and everything goes back to normal. And directly from here, you can gain access automatically with the email and password that you will create during the checkout process. So definitely looking forward to have you on board, and at least go and check it out at TransparentFXTrading.com.
If you enjoyed the video, make sure to smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.